Most Kenyans rush to banks the moment they need a loan. It feels safe. The buildings are flashy, the staff are polished, and the logos look powerful. But here's something many people never stop to think about. That same loan might be the reason they stay broke for years. Meanwhile, the quiet SACCO in town could be the smartest place to borrow from. Not because it's trendy, but because it's structured to help you grow. So here's the big question. Which is actually better? A SACCO loan or a bank loan? This is not just a finance video. This is about protecting your future, building wealth the smart way, and choosing systems that work for you, not against you. If you're trying to escape debt, start a business, or invest wisely, this video is for you. Let's start with a common belief. Banks are for serious business people. SACCOs are for hustlers and villagers. You've heard that before, right? But let's flip that idea. Here's the truth. Banks exist to make profits. SACCOs exist to serve members. When you go to a bank, you're just a customer. They don't know your dreams. They don't care how much you are struggling. They are focused on one thing, making money from you. But when you walk into a SACCO, you're walking into a system owned by its members. That means the profits are shared. You can get dividends, you can vote, and yes, you get lower interest on loans. It's not just about money, it's about mindset. So today, let's go deeper into how these two systems compare, using real numbers, real scenarios, and one story of a young Kenyan who made the smart switch. Number one, let's talk about interest. This is the part that most people don't pay attention to. They walk into a bank, get offered a loan with interest at 15%, and sign on the dotted line. But interest rates can destroy your finances if you're not careful. Banks in Kenya usually offer personal loans with interest rates from 13% to 20%, sometimes even higher if you have no collateral. SACCOs most charge 8 to 12% interest, and it's usually on a reducing balance. That means every time you pay, the interest goes down. Here's a quick example. Let's say you borrow 500,000 Kenya shillings. A bank loan at 16% over 3 years could cost you around 720,000 in total repayment. A SACCO loan at 10% on reducing balance might cost you about 620,000 or less. That's a savings of 100,000 shillings just by making the right choice. Now imagine what you could do with that extra 100K. Invest in your hustle, add stock, or just breathe a little easier. And trust me, insight number 2, that one will completely shift how you see freedom versus frustration in your money life. So stay with me to the end. Quick pause, I'm Danson. And if you're enjoying this, hit that subscribe button. It fuels this channel and helps me bring more value your way. Asante Sam. Number 2, who are you borrowing from? This is something they don't teach in school. When you borrow from a bank, you're giving them business. When you borrow from a SACCO, you're investing in your own system. Let me explain. Banks are privately owned. Their profits go to shareholders. You are not one of them. SACCOs are cooperatives. When you join a SACCO, you become a shareholder. Your savings give you shares, and those shares earn dividends. That means while you're repaying your loan, your savings are still growing. And when the year ends, you might get a bonus. You'll never hear a bank say, here's a dividend because you are a loyal customer. SACCOs reward you for being part of the team. Number 3, meet Mercy. Let me tell you a real story. Mercy is 28. She runs a small side hustle in Nairobi, selling wigs and skincare products online. She started with just 5,000 Kenya shillings from her salary. Last year, she wanted to grow. She needed about 150,000 to buy stock in bulk and reduce her costs. So she went to her bank first. They told her, you need a payslip, security, and even then it will take a few weeks to process. Interest? 15%. She left feeling defeated. Then she remembered a SACCO her cousin had joined. It was smaller, yes, but she had been saving with them for 8 months. She applied for a loan, and within 10 days, they gave her 150,000 at 10% interest using only her savings and one guarantor. Within 4 months, her income jumped. Today, she makes 75,000 to 90,000 Kens per month, all because she chose the loan that helped her grow, not shrink. Your story could be next. Number 4, what about speed? Let's be fair. Banks are faster. If you have a salary, some banks can disburse loans in 24 to 48 hours. That's useful in emergencies. SACCOs are slower. You have to save fast, sometimes for 3 to 6 months. You need guarantors. You might wait a week or more. But ask yourself this. Are you in a hurry to solve an emergency, or are you building something long term? If you're looking to grow a business, buy land, or fund a project, patience can save you money, stress, and future regret. SACCOs may be slow, but slow money is safe money when it's structured right.
Number 5, flexibility and humanity. Banks follow strict rules. If you miss a payment, penalties. If your business crashes, they blacklist you. SACCOs tend to be more human. Because it's a community-based model, they're more likely to listen. Some SACCOs offer top-up loans, rescheduling, or emergency options without heavy penalties. And here's the best part. They look at your consistency, not just your job title. If you're self-employed, hustling, or freelancing, they understand your rhythm. That's why many young entrepreneurs prefer SACCOs. They don't require a payslip to believe in your potential. Number 6, freedom starts with intentional borrowing. Whether you choose a SACCO or a bank, one truth remains. If you borrow to survive, you'll stay trapped. If you borrow to grow, you'll break free. Don't take loans for weddings, phones, or consumption. Take loans to build. Assets, side hustles, income streams, education. Borrow for things that make you money, not take money from you. It doesn't matter whether the money comes from a SACCO or a bank. What matters is what you do with it. Banks give you speed, but with profit-driven terms. SACCOs give you growth, but you have to play the long game. There's no one-size-fits-all answer. But if you're the kind of person who wants long-term freedom, if you're tired of paying for things that don't pay you back, if you want to build something real in this life, start with the right foundation. SACCOs may not be sexy, but they are powerful. They are quiet. They are for builders, for hustlers, for visionaries, people like you. We were never taught how to borrow wisely, how to use credit as a tool, how to say no to shiny banks and yes to steady growth. But now you know better, so here's your next move. If you've never joined a SACCO, do your research today. If you're borrowing from a bank, ask, what is this costing me in the long run? And if you're already building, double down. Stay disciplined, grow slow and strong. This isn't just about money, it's about freedom. A life where you're not constantly in debt. A life where you own your time, your choices, and your future. If that's the life you want, hit that subscribe button because this channel, it's your blueprint. See you in the next one.